A very good afternoon to you, Ken. Looking at the secondary market, the market pretty wary this week, really given the direction of rates. They don't know where rates are going. What do you make of the situation right now?
Yes, there's actually a lot of caution in the market, and as you mentioned, a lot of investors are not quite sure on the direction of the rates, with most indicators indicating a downward trend towards the close of the year. Actually, as we saw, inflation last week came off, and in the previous, I'd say, 8 to 10 weeks, prime rates had been coming off consistently. But what we've seen over the last 2 weeks is the prime rates going up. Like last week, we saw the 91 go up by 44 basis points, and the 182 day by about 37. And what we've also seen is the interbank rate also rising for currently to stand at about 8.7 from about 6.5. That's about 3 weeks ago. So all this, it's a bit confusing to the market. Most investors have decided to sit it out. So the secondary market is rather quiet, and what we're seeing is actually a buyer's market, because there's a large supply overhang, no demand coming in for securities across the tenor. So I think most of the market is waiting for an indicator on the way forward. I think what happened with inflation was the inflation numbers are not enough. The sad thing is that the MPC, which is the other indicator that would actually bring confidence back to the market, don't meet until November. So we may continue to see this uncertainty hold for the next 3 weeks. We have a 2-year paper which may be issued this month. So we'll just wait and see on the effect that has on the market.
Well, talking about that 2-year paper, we've got the Market Leaders Forum due to meet at the end of the week. Do you think they would perhaps announce a 2-year paper?
Most of the market sentiment is actually for a 2-year, and after last month's meeting, the MLF Market Leaders Forum had actually indicated that they would be doing a 2-year paper this month. So we may actually see them come to the market, and actually that's the best paper at the moment considering the uncertainty in the market. So a longer term paper may not get as much interest as a short term paper. And we're looking, the levels could be anywhere, considering levels about 3 weeks ago for the 2-year tenor was about almost below 9%, with about 8.50 to 9%. Currently, we've been seeing trades going through in the upper 9s, 9.8 to about 10.2%.
Looking at the shilling, it has come under a pressure, but ended stronger in today's trading session. What is your outlook for the shilling? Is this just a temporary comeback here?
I think we saw the shilling react to the low inflation figures last week, as investors expected probably a rate cut based on this. But with what we've seen today is the shilling has actually gained some ground. Some traders were cutting their long positions, and also we know the central bank has quite a high forex cover. So I think a lot of traders are afraid that if they may be caught on the wrong side of this, if the CBK decides to come into the market and sell off dollars in a bid to pick up shillings from the market to mop up liquidity.
Let's turn our attention to the local bourse, the NEC 20 ending in negative territory, but you have the likes of KCB contributing 60% of the day's turnover, but with the foreign investors, however, falling back only about 40% of activity in today's trading session.
Yes, they actually did about 40% on KCB. I think actually the big trade that went through, they actually came in looking for this counter, and we saw local investors taking profits on KCB. It went up to about the high of about 27 to 75. I think it has a resistance of roughly about 28 shillings. So the closer it comes to this, what tends to happen is local investors begin to take profits. But activity did actually increase to about 577 million from yesterday. This is actually positive. And we may, although the 20-share index, as you mentioned, did come off as we saw investors begin to take profits. So we saw prices begin to come off, especially on some key blue chip counters, such as Nation Media Group.
We are into the fourth quarter of the year, well, the first month of the fourth quarter. What are your expectations of how the NSE 20 is likely to trade? It's still battling to get above that 4,000 points level mark.
Yes, that seems to be a resistance level that I think if that were to be broken, we'd actually see we may have a small bull run. But traditionally in the fourth quarter, what tends to happen is the market begins to slow down as we move towards the end of the year and the holiday season. And I think this is also unique here in the fact that we also have elections coming up early next year. We may see the market begin to slow down further as investors begin to price in more risk as probably the political noise increases.
Well, that's where we have to leave it. Thank you so much for joining us, Ken. That was Ken Minjire. He's a fixed income and money markets analyst from Stanbic Investments, joining us from our studios in Nairobi.